My name's Justin Reid. I'm the CEO of Troilus Gold, listed on the TSX big board. We are developing or redeveloping the past-producing Troilus mine in northern Quebec.
Justin, thank you very much for the introduction. You've just put out a new news release talking about a new mineral resource. There's been a big growth in kind of the headline numbers. Can you just, by way of starting us off, tell us what those headline numbers are, just to kind of set the context?
Sure. After 350,000 meters of drilling over the last 4 years, we have put out 11.2 million ounces equivalent indicated at an average grade of 0.69 grams. We can talk about some interpretation later, and an additional inferred resource of 1.8 at almost the same grade. So a headline across all categories, 13 million ounces, 99% indicated in a brownfield site in northern Quebec, of which 99% of this is going to be open pittable.
Now, a lot of that discovery has come quite recently. You've picked up these new zones, the X22 zone, the connector zone, which brings with it lots of change, which is good because you're kind of adding to the resources. But it also kind of in some ways sets you back in terms of the technical studies. But let's talk about the positives first, which is how that evolution has gone. I mean, because you've had 5 rigs turning, and are you still in that kind of discovery process? Is the resource still growing?
The resource could grow if we wanted it to. We've actually shut the rigs down for the first time in 4.5 years. Kind of giving everybody a break, catching up on obviously all the things you need to do. And, with the 13 million ounce and all group indicated and inferred resource together, we don't need more ounces anymore. Obviously, It's about good ounces or better ounces, if you will. And that's what X22, the connector, the main zone of the Southwest has done for us, is provided higher grade cores that are very shallow, that are going to allow for better material early through the mills.
Were they picked up almost as a process of sterilization as you were kind of going through the kind of the geotechnics, or was it a kind of a conscious, we think that there's going to be some mineralization over here?
The Southwest deposit, which we discovered brand new, which is 2.5 kilometers away from the main mineralized center, was a greenfields discovery, and that was 600,000 ounces, just turned into over 2 million ounces. So significant growth there. X22 was found as part of our geotech drill program. There we go. I'd rather be lucky than good sometimes, but that was, the discovery hole was 30 meters of 4.3 grams from surface. And that was really 2 things, a geotech hole and then trying to reach 87 south. So we collared in what we thought was the optimal area. And, the first 30 to 50 meters was mineralized. The connector zone, which is the saddle really between the J and 87 ped, was part of sterilization drilling, and that returned 138 meters of 1.75 grams, 21 meters of 5 within that. So, it's just doing the appropriate work for engineering. Getting all your geotech done to hone in the ultimate pit slopes that you're going to develop, and seeing where you can put down a mill. So, yes, the problem obviously is that the ore body keeps going and the grade's getting better.
Yeah.
But, the problem is from an engineering side, well, you now have to deal with it, which is time and money, right?
Exactly, time and money. And that evolution of your understanding of the geology of the area changes the way that you look at it. I mean, I noticed that from an earlier interview you did with Matt, you were talking about I think it was at the beginning of this year, so 9 months ago, pretty much. You were talking about kind of targeting a high-grade zone and kind of having a cutoff of 0.5 grams per ton, and yet the base case for your resource, the recently published resource, is actually 0.3 grams a ton. So you've obviously changed the way that you're thinking about it, which is going to affect the way that you address the technical and economic study that's coming.
Yeah, fair question. So what happened is, as we started to drill out these higher grade zones. And the high grade zones still persist. They are absolutely there. There was a mass of lower grade, call it, 0.7, 0.8 material around these higher grades. And so as you start to develop your ultimate pit shells, it's grabbing all that material, bringing your average grade down, and the pits are getting bigger and bigger and bigger. So we saw that around the connector in X22, added a lot of ounces. And you'll see in our press release and the presentation that's on our website now on the resource, those higher grade cores still persist. They're very well defined. They just get dragged down by bringing in anything above our ultimate cutoff, which is 0.3, which we need to do for the pit shells. And then some of our underground, which we had from very early on in the company, turned into underground as well, or into open pit as the pits got dragged deeper. So they get diluted as well. So yeah, the pits are getting massive. So right now, X22, J87, and the connector are going to become one pit. I think the overall strike is going to be more than 3.5 kilometers long, and the width will be 1.5 kilometers, almost 2 kilometers. It's going to be a very, very big hole with another pit to the south or the southwest. The other, I guess, technical change that came as per your question, X22 is positioned along a D2 structure. So our main trend, our D1, is northeast southwest. This cross-cutting D2 structure is mineralized, significantly higher grade in places, and hosted almost exclusively up in the hanging wall of the deposit, which historically had never been considered by the previous operators. And so now we look at the geophysics across the entire mineralized horizon down to the southwest, and we see a number of these repeating D2 structures, which provides future exploration. And, if we can pull out 30 meters to 4 grams out of them, we're going to take a look. So that's for the future. But certainly, as soon as you find those, great, we had to delineate them. And we had to drill them. We didn't drill them to the inferred. We drilled them to the indicated so we can bring them into the feasibility study. And on top of that, we had to do all the geotech work for that portion of a new expanded pit. That takes time and money. And of course, it's a new mineralized horizon. So we've had to do all of the, though we're very confident in it, we had to do the initial met work to a feasibility level on a new mineralized horizon. And so all of that was done in the last, 10 months, which is pretty remarkable.
Are you there? I mean, you say you've stopped, you've stood down the drills. You've identified some of these D2 hanging wall structures, in particular the X22 zone, which has got a high grade in it, but you're going to leave the other ones out for now. And so have you got enough confidence to say we're not going to tinker with it, we're going to just advance what we've got to a feasibility study?
Yeah, and the feasibility is almost done. So we were, if you'll recall, we were very close to putting out a pre-feasibility in November when we discovered X22. X22 is having, I can say, is having a major impact on the economics of what this is going to look like. And yes, so we have everything we need now to deliver the feasibility. And a lot of that pre-feasibility, the met work, the tailings work, the water management, was all done to a feasibility level almost anyway. So we've had a very quick progression to feasibility level, just knowing that X22 connector zone had to be incorporated. And that's been ongoing while we've been drilling it out. We had enough confidence as we were drilling it, we knew we were going to be including it. So,
because one of the challenges when you're building a mine or doing any big engineering project is change of scope along the way. And I mean, we're building a high-speed rail network in this country, which is an absolute disaster as the scope keeps changing every 5 minutes. And when speaking to mine builders and the kind of the construction teams, they always say that the thing that really throws the budget and the delivery is the groundwork, is that the company finds out new stuff as their build is going on, which changes the metallurgy and changes the geotechnics and changes the resource blocks. I just want to come back to that.
Yeah, I mean, that's always a risk. X22 is a very specific, well-defined area. And we think we have the scope of that locked in. So we're not changing the scope of our bankable feasibility. We're still approaching this at 35,000 tons a day with the infrastructure that we have in place, optimizing that. And our whole premise was to optimize and utilize the infrastructure that we have to prevent the impact of inflationary creep that we're seeing everywhere. So use the upgraded infrastructure that we have to our maximum ability, and also take advantage of the earthworks that are done. Remember, when you look at the blowouts in capital from similar type of deposits that are under construction or have been constructed, it's not the fixed price items that are blowing out. It's not the mill. It's not your fleet. It's not your camps. It's not the hard assets. It's the civils at the end of the day, moving dirt. And for Troilus, our tailings facility is constructed. Huge impact. Huge value to us. 6.5 square kilometers. We have 3 years of capacity without having to do a lift, and ultimately we're going to have life of mine capacity. That is an unbelievable advantage to us. The roads and the power. What I read, one of our shareholders had said that, they've got a road and an extension cord, but the road is 2-lane production ready. That's $1.5 million US a kilometer to build, and it's a 42-kilometer road. The power line, 171 kV going to a 50 megawatt substation, is $1 million a kilometer to build. But more importantly, it took 5 years for INMET to permit that. And that was in the 80s. The time cost of capital is huge here. So we have a bunch of advantages. So we are optimizing and building based upon the scope of infrastructure that we have. If we had nothing here, you would probably build this at 55, 60,000 tons a day right now. We're going to have a 20-year plus mine life in our bankable feasibility. It's going to be it's a generational scale asset. But if I was Barrick, I would come in and build it at 60,000 tons. I'd build Detour right now. But Detour is going to come with $1.5 billion capital. We are going to be able to mitigate numbers massively because of what we have. So we're building it to the right size of the company that we are and the infrastructure that we have.
And you haven't been able to give a CapEx figure since the PEA 5 years ago or 6 years ago, even longer.
Yeah, the PEA was in 2020, so 3 years ago, 3.5 years ago. It was $350 million US.
315.
Yeah, 350. And that was...
Okay.
That was based on a 14-year open pit going to an underground. They were putting a lot of sustaining capital kind of into year 7 for the underground build. You have seen, and our infrastructure was valued at $350 million at that time. So think of it as call it a $750 million build. The value of our infrastructure, we've just had it recosted for the feasibility, is worth about $500 million US now. So, add that of inflation onto the 350, this is going to be a $600 to $700 million bill. And that's not surprising anybody. That's what every analyst that covers us has. That's what we've been guiding to. But then when you couple that with the infrastructure that we have, it's a $1.2 billion project. Which all of a sudden is exactly like Greenstone, which is being built by Eric Lamontagne on our board. 36,000 tons a day, very similar ore body. So, I don't think it's going to surprise anybody.
Okay, so it's within reasonable parameters. And in terms of raising the capital, you've mentioned in the past the kind of the copper kind of contribution. I think you said it was about 20% of your revenue at $4.50 and 15% at $3.50. Are we clearly closer down at that end, or has the new resource kind of shifted it up a bit?
No, probably. It really depends on what zone you're mining from. The majority of the ore comes from, I think almost half the ore, maybe a little less, comes from 87. And 87 is our most copper rich though. That remains about the same. But certainly I would say copper concentrate demand over the last year and a half has skyrocketed. We're going to produce 35% of our gold through gravity through a Nelson circuit on site. So we'll pour doré. And then the rest is going to report to a copper, gold, silver concentrate. And, it's going to be 50 to 60,000 tons of con a year. It's not incredibly high grade. The con is incredibly high grade copper, call it kind of 50 to 17% copper. But it's going to be over 140 gram gold and 250 gram plus silver. So from that standpoint, it's a very lucrative con. It's in very high demand, and copper concentrate offtakes, I think, are going to provide a lot of alternative funding that would typically have to have been put in place through an equity contribution to a debt facility. And so I think that having the copper con is going to give us a whole bunch of optionality that we didn't have. And of course, we also bought back our 2.5% royalty from First Quantum a couple of years ago. Again, there was a little bit of criticism for that. Why is an exploration company buying back the royalties? But the impact of that on this operation would have been huge, and so we have that unlevered as well.
When you're looking at the kind of the timeline ahead, you've got the feasibility study coming up, hopefully Q1 next year, possibly. Let's call it the first half of the year. Yeah. And then you're into financing discussions, or is there a permitting block in there as well?
Well, yeah, let's deal with the timeline on the feasibility, because I don't want people to think we're slipping. We're not. I think we are on track. We have been guiding to the end of this year, early next year, and I think we'll have it all done in December. But certainly, we're not going to be putting anything out at Christmas time. So I think we're going to be able to deliver early next year, once everybody's back from Christmas. So I'm very pleased with how that's progressing. That's, the resource was one of our big deliverables. Probably it took us a little longer than we thought, but we got it out. I'm pleased with that. The feasibility is still on track. So those are two big major catalysts, one delivered, one coming. And then on the permitting side, let's talk about the permitting first, then I'll come to finance it. We are 8 to 9 months in, and we've quietly, our detailed project descriptions have already been filed with both the province and the feds. Our terms of reference have been negotiated and defined. Stantec has been hired. All of our environmental baseline work is, not only do we have 14 years of data, we have 10 years of data since it's closed, plus all the work we've done. So there is fully underway. And we hope that we can have that. EIA fully submitted by the middle of the year Q3. So then the permits flow after that. I think that you'll see the provincial permit will be the first, and followed by the federal. Again, we're a Brownfield site, so the impacts and the disruption is really well known. The environmental impacts are well known. This was a 20,000 ton a day operation already. So, and our stakeholders are all very aware. So permitting is well advanced. It's not something you talk about a lot because, being able to give you timelines for that is the single hardest thing in Canada. It's always plus or minus, and sometimes that's 3 or 4 months, if not more. On the financing side, we are working with a third party now on essentially building a debt syndicate. Our resource was really the first driving piece of that, and so third parties have that now, and they're tearing it apart. I'm not too worried about it, and that becomes the validity for term sheets. Our ultimate goal is to have. We're talking to a number of groups on offtakes for the copper con. And of course, all the royalty and streamers are interested, but that's use if you need to, and ideally the last thing you do in a project financing. So our goal is really to get the feasibility out and then show the market as fast as possible. So we're targeting the first half of next year. Essentially a structured financing package that, of course, is contingent upon permits and everything else, but shows the market that the capital's available, and we certainly think it is.
Wouldn't you argue the point that perhaps a $1.2 billion build, even with the infrastructure you've got, is too big for a $100 million junior? Shouldn't you be looking for partners? Or
sure. We have multiple streams ongoing, and so certainly Troilus is going to have to find something. You look at the risk associated with this type of thing. You look at IAMGOLD at Cote, they partnered with Sumitomo. You look at Equinox Gold at Greenstone, they partnered with Orion Mine Finance. You're seeing more and more partnerships now, and certainly I think that what I care about ultimately is value per share. And so whether Troilus owns 100%, 51 or 48% of this asset, if we can show accretion to value and significant de-risking to our shareholders, we'll look at those options. And certainly I think is a prevalent theme in the gold space right now is that the producers' balance sheets are getting better. They are not replacing ounces, especially reserves. There is not a lot of global projects that are generational in scale and can produce that 300,000 ounces equivalent or more, and I think Troilus is going to be there. So, yeah, certainly, I would be very naive to say that partnership isn't a consideration, and that there are discussions already being had. Ultimately, it's what's best for our shareholders. We have a whole bunch to deliver first.
Well, on that, I mean, talking about kind of value per share and delivering for your shareholders, one of the things that people look at is cash on the balance sheet. The other is, of course, the crappy markets that we're in, which we can't really control. But then it's the kind of what can you deliver in terms of news flow. So
yeah,
let's perhaps go first to cash on the balance sheet and kind of where you are.
Yeah, I think as our last quarter, it was about 30. We are less than that now, probably half of that, because we went very, very fast to get X22 done. Obviously, our burn has been curtailed by shutting off the drills, and so your camp goes from 100 men to 15 men. We don't have all the drills and the infrastructure and the sampling, but for the savings that you have on that side, you have costs wrapping up on the engineering side and the technical side to deliver those under timeline. So yeah, we've reduced. So our balance sheet's so fine. Like every gold company, we will need money in the future. If from now to a construction decision with long lead time items, detailed engineering, and all those things, it's probably another $35 to $40 million. But again, that's not an immediate need for us. We have a lot to deliver before that.
So that comes to news flow then, in terms of, so you've got the feasibility study and then the financing news. Those are kind of the key pushes.
Yeah, we have some permitting news to come, some major milestones being achieved. We have all of our summer exploration work. So despite we lost part of the summer because of forest fires, but we did manage to get a significant amount of regional work done. And again, it was very focused exploration on high-grade potential that would be accretive to the Troilus. We don't need more sub-1 gram material. And so we have a number of things there being finalized that will get to the market as well. And then that rolls right into the feasibility. So, we're middle, almost end of October now. So November, December, I think we're going to be fairly busy.
Great. Well, good luck with it all. And thank you very much for the update.
Thanks, Carl.